Good afternoon, everybody. Good afternoon. Welcome to the next in the Admirals Trading Spotlight webinar series. Here we are today to talk about quite an interesting subject in terms of drawdowns and how to come back from them. If you're joining us here today, great to have you here, or if you're watching this later on the Admirals YouTube channel, then yeah, you're very welcome. Be sure to subscribe to the channel. Give us a thumbs up if you enjoy this content, or even a thumbs down. We don't mind. All feedback is gratefully appreciated there. As I said, today we're going to talk about a subject that lots of people would veer away from, right? Namely talking about drawdowns, but we'll get into that in a moment. As I always say, that we appreciate here at Admirals that we have a truly global audience joining us for our sessions. So wherever you are in the world, okay, it's great to have you here with us. We hope that you're all well and safe and making your way through this rather interesting 2022. And we also appreciate that we have a real range, okay, of experiences in the room with us for our particular sessions, from people who are just starting on their trading journey to people who've actually effectively sort of, been on their journey for what might be years, maybe even decades. Wherever you are on that journey, you are all very welcome. Today is going to be more a little bit maybe sort of focused towards, what maybe beginners need to understand, but I can assure you that anybody who's been trading for a while will take a good deal from this particular session. So without further ado, why don't we switch across to the sort of the slides and have a chat about drawdowns, about coming back from them. So just bear with us a moment. Let's bring up the slides here, okay, and we should be able to do this just with the wonders of technology and all that. Just bear with me 1 second. Here we go. Excellent. So I hope you can see the slide. Hope you can see me as well. Got a few little comments here. So yeah, fantastic to have everybody here. Okay, Janice, you're very welcome. Vasilina, you're very welcome. Doina Anka, if I hope I pronounced that right. Good afternoon to you too. Okay. Hello, Tina. Nice to see you again. And hello, Fred from Cape Town, a beautiful part of the world. Absolutely. I'm jealous that you're calling from there. And Andrea says, yep, the anti-drawdown lesson is a good thing. You're absolutely right, Andrea. So you are all very welcome. It's great to have you here. And as I say, this is probably a session or probably a subject matter that many people would probably want to avoid. All right, maybe people don't want to think about it, but it's about us embracing every aspect of your trading journey. All right, we're here at Admirals, especially in the Trading Spotlight. We want to be able to cover all sorts of different topics, all sorts of different subjects. Some that you may not think are absolutely useful today to you, but I assure you, on your trading journey, today's session will be useful to you. You will have cause to call upon it, and so hopefully, maybe it's something that you've experienced, or you've had understanding of yourself on a very personal basis, and that would be great to know. So maybe in the chat box here, put down what, if any, experience you've had of from drawdown in your own trading careers. And as I always say here, there's no judgment here from me. Okay, I appreciate everybody's at a different place on their trading journey. We're all here today, including myself. We're always learning, we're always developing, evolving as traders. And any way that we can look to help you, okay, well, you'll find that we're very keen and happy to do so. So remember, here we are, Admirals, right? A Forex and CFD broker with, a wide range of offerings for you, providing global presence with local support, licensed and regulated across a wide range of regulatory environments around the globe, providing competitive spreads on the most popular trading products and allowing you to engage with markets using the popular MT4 and MT5 platforms. And if you have any questions about Admirals, please get in touch with your account representative and they'll be very happy to help guide you. As always, we sort of talk about what we can offer you here at Admirals. And one of the elements, as I just mentioned earlier, is that you can subscribe to the Admirals YouTube channel. You'll see it there at Admirals Global. And what you'll find is that, our Trading Spotlight webinars, myself and also my colleagues, okay, Marcus and Jens, you'll find that they are all uploaded onto the YouTube channel. So there is plenty of content there, okay, to help you pass those long and lonely winter nights, ladies and gentlemen. Plenty of material there for you to be able to dig in and actually, cover all sorts of aspects of your trading journey. And, as I say, ensure that, you subscribe to that and you'll be constantly updated with new content as it is uploaded. So today's agenda, based upon what we're going to be talking about, well, we'll talk about, what are drawdowns and why do they happen? Why do they happen? It's important to understand that. We'll talk a little bit about, is it possible to identify any early warning signs? And you'll be surprised sometimes there are, and we'll talk about that a little bit later on. And I'm going to talk about, how professional traders deal with them. How do they look at them? Okay, what is it they're kind of looking for in terms of solutions? Now, as always, we're under a little bit of we're in a little bit constrained in terms of the time we have available today. So, we'll give you some ideas and some hints and stuff on solutions that you can consider yourself. But you will find that there is a plethora of available content out there, okay, that will actually help you with dealing that. Some fantastic books by some fabulous trader coaches that are out there, and it is something that all traders have to learn and understand and work with. All right, it's which we'll come on to in a moment. For those who don't know me, my name's Paul. I've traded for many years, traded for hedge funds, traded for high net worth clients. Okay, I primarily trade FX and indices and commodities. And for the longer term trading, I like to be a sort of a trend trader. And for my shorter term intraday trading, I tend to be a mean reversion and reversal trader. So as I said, I've traded for many years, okay? I've had drawdowns in my trading career, okay? It happens to everybody. And maybe that's the first learning point that, I would share with you, is that everybody will have drawdowns, okay, at times during their trading career. Anybody who tells you that they don't is probably not telling the entire truth. They're probably telling you a few fibs and lies. Everybody does, okay? So if you are presently going through one, as as one of the reasons for joining us here today, don't be too hard on yourself, okay? It is part of your journey, all right? It's part of the actual journey towards trading mastery. And I have to say, you'll probably go through a few in your trading career, right? It happens to everybody. And part of that today is about understanding it a little bit better and understanding, why has it happened and what is it that we can actually sort of look at in terms of things that we could do very quickly to help start almost like trying to turn the super tanker. But we'll come on to more of that later. So, as you said, coming back from a drawdown, all right, what is it? What is that we need to be aware of? What is it that we can do to help ourselves? And as I said, if you're presently experiencing one, or if you've had one, a period during your trading career, it'd be great if you put it in the sort of chat box or even in the comment box if you're watching this on YouTube. It'd be great to hear, what your own experience was. Was there something that particularly helped you? Was there something that, sort of either helped you identify it, or was there something that helped you kind of, turn the sort of, as I keep saying, turn the super tank around to get it pointing in the right direction? As I said, never any judgment from me, all right? Everybody's going through their own trading journey, and there will be highs and lows, okay, across everybody's journey. It's, it's absolutely fine. But as the slide says, ladies and gentlemen, no trader likes taking a loss. Many people will do whatever they can to avoid taking a loss. That in itself tends to get people into a lot of trouble. And in doing so, anything they can to avoid taking a loss, very often they end up destroying their account whilst engaging in what would be known as loss aversion bias. We are all, susceptible to that. None of us really like taking a loss. But as you grow as a trader, as you mature, you realize that taking losses in your trades, that is just part of it's the yin and the yang of the trading, okay? It's the ebb, it's the flow, all right? It's the zig and the zag of it all, all right? It is part of your trading journey. Nobody gets to escape that, okay? If anybody tells you that they don't take losses, all right, they don't have drawdowns, then, they're talking rubbish, all right? They're talking rubbish. And I will stake my career on that, all right? Everybody will go through losing trades, and everybody will go through particular drawdowns. But it is how you actually sort of embrace that, how you deal with that, that will effectively, it will affect, how quickly you can turn around drawdowns, and and how quickly you can basically get back to sort of going to sort of new, let's say, new highs in your equity curve. As the slide says, most experienced traders know that taking a small loss is the epitome of good trading. Your first loss is always your smallest, I will tell other traders. And you might be saying, well, what does that actually mean, Paul? Your first loss is always your smallest. What I generally mean is that, when you're trading, if you're trading as we have always as we've always positioned and promulgated here in the trading spotlight, namely that, you should always be sort of trading, with good risk management, namely never trading without stop loss, only ever risking a small portion of your account on a trade. That is the first part, okay, of being able to sort of show that your first loss is always your smallest. As I sort of said a little bit earlier, we all have loss aversion bias. We don't like taking losses, and many people will do whatever it is they possibly can to avoid taking a loss. But very often that actually leads them into, let's say, a more dangerous area of their of managing their particular trading. But if you're doing, what we've always talked about, namely that you are, only risking a small portion of your account on a trade. We normally have been talked here about maybe 1% or so of your account on a trade. We've always taught you never ever trade without a stop loss. That means that invariably you are just, doing what you can, all right, what is within your control to basically be able to manage risk, manage your trading. And that avoids you from taking a particular large loss, just a large one-off loss. That's what we want to avoid. But then what happens when we start to take a string of losing trades? What happens when we have 2, 3, 4, 5, 6, 7, 8, 9 losing trades on a trot? Even I've had periods in my career where I've had 9 losing trades on the trot. Even though I can be a successful trader and I can do really well as a trader, I will still have had periods where I've had like 9 losing trades on a trot, and I'm happy to talk about that and share with you, because it happens to everybody. All right, it happens to everybody. Anybody who tells you that they have not gone through those kind of experiences, as I said, they're talking rubbish. It'll be part of your trading journey. But what we'll dig into later on today is about understanding of why has that happened? What is it all about? Why might that have occurred? What do I need to do to start basically, turning the trajectory of my equity curve? And as it says, today we'll explain about drawdowns for traders and what they can do to help manage such experiences. And it can then be, I appreciate it can be it can sometimes be an emotionally painful experience, especially if you are taking quite a few losing trades, as you will do during your trading career. But part of it is recognizing, the first point is that, a losing trade says nothing about you as a trader, and as a person, as a human being. And, one of the many things that new traders will do is that they will attach their self-worth to the outcome of their trades. So when their trades are winning, they're full of confidence. They feel fantastic. They're on top of the world. When they're taking losing trades, suddenly, they're depressed and unhappy and upset. That is not a way to trade. It's not a way you can actually lead your life. If you're by attaching your self-worth to the outcome of your trades, you basically effectively strap yourself into an emotional roller coaster, and that is just it's not a way to lead your life. It's not a way to lead a trading career. Okay, I can assure you. And I do recognize that it can be easy for me to sort of sit on the sidelines and say, don't attach your self-worth to the outcome of your trades. I appreciate it's easier to say than it is to maybe experience when you're a new trader, and invariably you're emotionally invested in basically your trading career and in fact, the outcome of your trades. But the quicker you are able to detach, right, to detach your self-worth, okay, your ego, your attitude away from the outcome of your trades, the quicker you will be able to help yourself operate effectively. Because once you're able to do that, well, then things like loss aversion bias becomes less of an issue for a new trader. And that actually what you can do is you just focus on the elements that you can control, namely that you plan your trade your plan, manage your risk. If you can do those 3 things, session after session, that is successful trading. Okay, it doesn't matter about the outcome of the trades, the P and the L, and how much of the P, your profit and loss swings on your trades. You focus on what you can actually do. Okay, plan your trade your plan, manage your risk. Those are 3 things that you can do every single trade, ladies and gentlemen. That is the definition of good trading. And if you're doing that, well, then invariably, any losses you'll take are your smallest losses. It means that, when you do have a drawdown, it will be a small drawdown rather than a large one. All of these things can help you, and we'll talk more about that in a moment. So in terms of coming back from a drawdown, well, first, we probably need to understand, about managing drawdowns for traders is, do you actually understand what a drawdown is? Do you understand what it actually involves? And it'd be interesting to see, here today, people, what, if any, your experience has been. And as I said, there's no judgment, all right? There is no judgment. Everybody will go through drawdowns. Maybe you've been through one, and you found it a little bit challenging. Maybe you've not been through one yet, but you recognize that it's a possibility. That's I commend you for that, okay? Forewarned is forearmed and all that. But what we talk about in terms of a drawdown is, if you want to look at a kind of definition of it, drawdown is the difference between the previous high point on your equity curve and the lowest point in your equity curve. Basically, how much a trading account is down from its previous peak before it hopefully recovers. And hopefully what we'll do is later on is talk about what you can do to recover. It's usually described in percentage terms, but it can also be described in dollar terms certainly for people, some people working for proprietary trading shops, okay, or traders working in that environment. But it's usually described in percentage terms, as I said, the drop and drawdown from your previous high to what would be your present low if you're going through one at the moment. So, in terms of Paul's high school level of artistry, what we're looking here, okay, is in terms of coming back from a drawdown is recognizing and understanding that. Let's just bring up the old drawing term. Everybody loves to talk about these, okay? Everybody loves to talk about these parts in your equity curve, all right? Where you're actually sort of, you're generating good results, the profits are pouring in, okay? Your equity curve is going in the right direction. Everybody's happy to talk about that. Everybody loves talking about that. You're just human, all right? You realize that. But really, drawdown, okay, and what we need to understand is, as I said, this drawdown is basically from your previous peak to the low, and it's this piece here, okay? It's this piece here. That is what's known as drawdown, and as I said, it can be sort of defined as normally defined in percentage points, okay? Percentage difference between the previous high point on your equity curve and the lowest point in your equity curve. As I say, it's the zigzag. In the same way a price chart zigzags, so will your equity curve. There's yin, there's yang, there's ebb, there's flow, right? It's, two sides of the same coin, two sides of that coin of, actually being a trader. And as I say, you are going to experience them as a trader. Embrace it, right? And what I mean by embrace it is, don't try and avoid it, okay? Don't try and avoid it. Don't sort of turn away from it and hope that it will just go away by its own accord. That is not the sort of element of good trading, right? That's not the element of good trading at all. What we want to be able to see is that, we just recognize it when it happens and do what we can to understand why it's happened. Is it something that, you do as a repeatable pattern in your own kind of behaviors that maybe we could work upon? Or just recognize, what works for you in terms of being able to help you turn the super tanker. And when I appreciate that, that's probably a bit of an English slang, but when I'm talking about turning the super tanker, it's like, if you've ever seen those kind of big oil super tankers, it takes a very long time to turn for them. Okay, they don't turn on a sixpence like that, like a little speedboat. All right, they're going in one direction. It takes a while to turn. And that can be the same, all right, in terms of turning your equity curve, turning around your trading. The important thing is at least you're going in the right direction. That's the important thing we want to take away. We want to talk about going in the right direction, making the move, and what can we do? Okay, what can we do to help with that? So, as I said, I've experienced drawdowns, okay, in my own trading. Everybody does, okay? Everybody does as part of trading. It's about recognizing, this is the important thing, is it just a, temporary situation, all right, based upon what we're going to talk about in a few slides' time, or is it more of, there is something just fundamentally changed, and we need to change it? Invariably, it is about us, we needing to change, all right? We just need to understand that, and we'll talk about that in a couple of slides' time about what you need to be aware of. And as I say, if you're new to trading, forewarned is forearmed. All right, forewarned is forearmed. Being able to understand these things, recognize these things, see these things when they happen, that can all be of, all of a help of you as, as you go through your own trading journey, as you go further and further down your own journey towards trading mastery. So why do drawdowns happen? Why do they happen? What occurs? And we're going to go into it in a bit more depth, okay, individual piece by piece. But what you will see, all right, and what I have either experienced myself or I have seen from years of coaching traders, who are running $200 million books, okay, at tier 1 institutions, to private retail starting out on their journey. Or I've been fortunate over the years to see the full spectrum of traders engaging in their own journey. But you can get elements, things like there's a system failure or a system degradation. That might be that your trading method has just failed. Maybe you were trading a specific setup that worked within very, very specific parameters, and maybe the markets have changed, and so those parameters are no longer viable, and that happens. Or maybe it's an element of a degradation. Okay, maybe there's just the performance that you forecast from your back testing and the performance you've achieved in the live market, maybe that has just degraded. And the question is, why is it degraded? And we're going to come on to that later, right? Why is it degraded? What is it there? And we'll talk about that a little bit later. What isn't talked about enough is very often is recognizing traders, the fatigue, or the traders themselves burning out. This is especially prevalent for people who are intraday trading, especially if you're doing a full-time intraday trading role. Maybe you're doing it for yourself, maybe you're doing it for a proprietary firm, maybe you're doing it for another financial institution. But people think that that they are immune to fatigue, they're immune to burnout. They think, oh, Paul, I'm a super fit, athlete, I don't experience fatigue, I don't experience burnout. How could I experience fatigue? I'm just sat at a desk, clicking a mouse, and surely I can't experience fatigue. And I can assure you that you can, and you will. All right, and you will, you will a lot. And we'll go into it in a bit more detail in a couple of slides' time. But one of the elements of that can help you is recognizing that in yourself. I'm a great believer that prevention is better than cure. So that kind of old medical saying. Prevention is better than cure. So it's about what can you do beforehand to help prolong your high performance trading windows, and also B, what can you do in order to effectively make any drawdown faster, smaller, and then turn it around in a quicker sort of basis of time. But very often what can happen is that, sometimes you get that fatigue, sometimes you get that burnout. That in itself can sometimes bring on fear and anxiety in trading. And once again, it's another topic that isn't really talked about a great deal in trading. But, I've talked about in sessions in the past about how, you're either a fear-based trader or a greed-based trader. It can be bits of both, but we tend to be sort of predominantly one or the other. And if a trader is experiencing fear and anxiety, well, that in itself is not a good thing, because it skews the way you perceive markets, and it tells you invariably it skews your decision making as well, none of which is a particularly good thing. And that can very often lead to over trading, trading too often, trading too much. Very often what I find is that over trading is occurring is because a lot of it is because the individual is chasing outlandish goals. They have set themselves very outcome-based goals, which are perfectly fine to begin with, all right, as it gives you a little bit of motivation and inspiration. But as you're unable to achieve those outcome goals, that in itself can become, a stick to beat yourself with. It's the sort of thing that helps lead to fear and anxiety, the sort of thing that leads to fatigue and burnout, because invariably you're over trading because you're trying to chase outlandish goals that are not really in line with who you are as a person or where you are on your own part of the trading journey. So, I see all of these things happen, all right, in terms of traders experiencing drawdown. And maybe you've experienced some of those elements yourself. Maybe, if maybe you've felt, a bit of fatigue or burnout. Maybe you've had fear and anxiety. Maybe you've realized that you've been doing a little bit of over trading. Maybe the kind of a trading setup that you had is no longer working in the same way that it once was. That occurs to everybody. And it's something that, you just need to recognize and embrace. And it'd be interesting to know, those of you here today, have you experienced any of those elements, all right? Any of those particular elements? Have you sort of seen them, experienced them, or even maybe heard about them with other traders? That's effectively, it's good to know that. So Vasilina says, you're channeling a floor trader. Well, that could be interpreted in many ways, Vasilina, right? In many ways, indeed. But it is a case of, there are probably other elements that can link into drawdowns happen. That's not the that's not the be all and end all list. There are other elements, but from what I see, right, in terms of lots of traders who are going through drawdowns, because invariably when traders are having drawdowns, that as well, they'll pick up the phone and phone a coach like myself to actually talk about, what's going on, all right? And because they want a solution, they want to basically be able to term the super tanker. So we see that, about why do drawdowns happen? And it is, because of those particular elements. And I said, there are other little elements that contribute, but these are things that I see consistently happening with traders. And as I said, especially traders who are trading on an intraday basis, whether that be, they're doing it for a few hours around their incumbent day job, or whether they're doing it full time, it tends to happen more often and faster because of that. So, with that in mind, let's talk about, well, what can traders do? All right. Well, what actually can they do? Well, it's always a way that, as it says there, the quality of your life is dependent upon the quality of the questions that you ask yourself. And I'm a great believer in that. For those of you, who've joined me over the years here at Admirals for these couple of sessions, I've always talked about looking at trading through the prism of the 4 M's, all right? Markets, method, money, and myself. Everything you do in trading is through those particular 4 prisms, and it's about you understanding them, and it's about basically, recognizing, what goes on within those 4 prisms, that becomes key. And the reason is quite simple, is because, what I've noticed is that, my terrible artistry is that basically, when those 4 M's are all in alignment and they're in a good place and overlapping, that tends to be when traders perform at their best. And if there's a change or a knock off in that, well, then invariably that's when we start to see traders taking a string of losses. That's when traders start to take a bit of a drawdown. So, we're going to talk about them individually, but even things like very simply, all right, even simply, it's about, for traders, I talk about, do you know your numbers? Do you know what your key performance indicators are as a trader? What does that actually mean? What does that actually mean to a trader? Well, as most people that have a trading method, what we say is, make sure that you do back testing, whether it be manually back testing or whether you're able to do it automatically. But that should give you a little bit of an idea, okay, of, how your trading method operates, and also, what are the likelihood of drawdowns? How often do they happen? How often, in terms of how many trades, okay, how many kind of losing trades in the trot might you be prepared to expect? How much do they generally tend to lose in terms of, what size are your kind of drawdowns? These are things that, I appreciate when you're a completely new trader, you may not understand, but as you trade and build up, data about your own style of trading, it is within your best interest to sort of mine your own data to start to pull out this kind of information. I find this stuff absolutely fascinating, and I find it fascinating when I see it in other traders, but it can really help you, understand your situation, help you grasp the reality of the situation rather than being in denial or avoiding it or ignoring it, okay? Doing that to help sort of get an idea, okay, accept the reality of the situation, because then we can start to sort of do positive things to change everything for you. So one of the questions we also have to ask ourselves is, do we continue to trade if we are going through a drawdown? And that's a very good question. And I've seen people do lots of different solutions to this, but what I've normally sort of come to the conclusion is that is that basically when that happens is, here we go, the next slide, sorry, is that what we're actually looking to do is that, you know, when it comes to continue to trade through a drawdown, is that invariably it boils down to two options, yes or no, really. But what I suggest is that if you do continue to trade through a drawdown, that you reduce your size dramatically, all right? And that can be, you know, I've known traders going from, let's say, trading generally a position size of 1%, and they may actually sort of bring that all the way down to like 0.1% to a tenth of a percent, all right? I've seen traders do that because invariably what they're doing is if they know is if they're, you know, if they're going through an expected drawdown as part of their method, well, then what they will do is they'll basically just, you know, just decrease their position size, all right, accordingly, in order to basically help them manage that particular drawdown. The other option is option two is that you don't, is that if once you recognize you're trading through a drawdown, you stop, all right? You stop and you go away and you take a break and work out what is the underlying issue. Sometimes that underlying issue will be very clear to you. Other times, not so much. The question you have to think about is, what would you prefer to do? If you experience a drawdown, do you think you prefer to trade through it, or would you prefer to sort of step away and take a break? I know for myself when I first started trading, all right, you know, what I would normally do is I would actually sort of try and trade through a drawdown. But what I found for personally my own experiences, once I'd recognized I was having a drawdown, I actually prefer to just stop, take a time to reflect, go through my data, understand what might be the possible, possible contributors, okay, possible contributory factors, establish them, and then resolve them before I come back to trading. So that would be me, and that's what I've learned over my years. That is not necessary to say that that is 100% the right way. What will be the right way will be the right way for you. What I'm doing here is offering, you know, what you need to consider and to think about when it comes to that particular part of your journey. So Vaseline says deep tissue massage. Well, I wouldn't necessarily put against that, all right? I mean, we might come on to that in a moment, Vaseline, all right? So, but we can clearly see how your brain is thinking. So thank you for that. Especially what we'll have is, you know, if you are trading for yourself, you know, you have to give that consideration. But if you are trading other people's money, if you're a fund manager, maybe you're working for a prop shop, etc., well, then, you know, if you're going through a drawdown, that will have an impact, okay? The effect that you are having in terms of trading other people's funds, you need to sort of take that, you need to take that on board. You need to take that into consideration. You need to understand, okay, what the guiding rules might be that come from, if you're a trader for a fund, if you're a trader for an institution, okay, if you're trading other people's funds, you know, do you have rules in place for that? Because if you don't, this is going to provide you with a fantastic opportunity to establish those rules, all right? Because we want you to basically be a long-term, profitable, successful trader. So if we look at those 4 M's in terms of what goes on, what we need to be aware of and what we can do, well, you know, if we look at the first one, markets, you know, it might sound a very simple question, but it's important to understand, do you know what environment your market is currently operating in? Is it trending? Is it range bound? Is it transitioning from range bound to trending? Is it transitioning from a downtrend to an uptrend, or an uptrend to a downtrend? You know, understand that. And I appreciate that might sound very simplistic, but very often I see traders, they lose objectivity. You know, maybe they've just been trading well, okay, they've been trading a trend very, very well, they've been doing really well out of that, they're enjoying it, okay, they've had a successful period. And what they do is they fail to take into account that actually that market is now changing, that trend is coming to an end. And what we need to do is to effectively be objective in terms of understanding the market environment that particular market is in. As I said, it sounds quite simplistic, but you'd be surprised how quickly people lose objectivity on it. So that's the question is, you know, has it changed? Has that market environment changed? Has it changed in terms of, let's say, the broad spectrum of markets? So maybe let's say if you're trading, you know, indices, all the global indices are rolling over, or maybe they're all breaking out, etc. And also that one specific market that you might like to trade. So just recognize that. Has it changed? Has there been a change in that trading environment? Because if it is, well, then, you know, that kind of leads us into the next part, which will come on. But you have to be aware of that. You have to recognize and understand what environment your market is in. As I said, it sounds very simplistic, and that people should of course naturally, sort of just manage that. But you're surprised how many people don't. So, one of your solutions is be very clear on identifying the right environment for your trading method. We're going to come on to that in a moment. Recognize, okay, which is your right trading environment. And as it says, stay out of the ones that do not suit you, all right? Stay out of the ones that do not suit you. And that is actually sometimes for many people, it's easier said than done, because people enjoy trading. They think to themselves, if I'm not there putting on trades every day, every few hours, how can I call myself a trader? But remember, as I've always said, your rule number one as a trader is to live to fight another day. And one of the ways you do that is by not squandering your firepower on crappy trades, okay, in rubbish market environments. Just ensure you understand and know what is the right market environment for you to trade. Andrea says the real hope is the drawdowns not going so deep in the tissue of the wallet. Manage risk, good way. That's a very smart, Andrea. Nice response there. Very good reply there, which we're going to come on to in a particular moment. The next element is method. Okay, your method, and leading on from markets, you have to ask yourself, okay, does your method match the market environment? Once again, this should sound very, very simplistic. All right, most people would say, well, of course, Paul, of course. But people forget these, okay? If you have a fantastic trend following system or trend following method, well, doesn't matter how great it is. If your market is now range bound or it's transitioning, it doesn't matter how great your trend following method is, it's not going to work. And vice versa, if you find yourself as someone who likes to trade ranges. So you have to understand, does my method match the market environment? Do they generally? Has it changed? Okay, has the market environment changed, or has maybe my method changed? As I said earlier, do you know your numbers regarding your method? Do you know what your KPIs are? Okay, what your key performance indicators? Perhaps the drawdown you're experiencing maybe is a statistical standard. Maybe it just so happens that every 30 trades you have you are likely to have a six trade losing streak. That might be very possible, as by doing back testing, forward testing, collecting all the data on your trading, that could actually happen. Or is it something that's a bit of an outlier? As I said, I've gone through, especially as intraday trader, I went through a few periods of 9 losing trades on the trot. Okay, that happens, even though my data would suggest it is actually a very, very small likelihood of happening. It is amazing how often these things happen, more often than you think, okay? And so, you can very seriously think, if you've had 9 losing trades on the trot, it becomes very easy for you to sort of start thinking, I'm rubbish as a trader. I'm over, I'm done. I just don't know what I'm doing. But it can actually just be an outlier. It can just be that you have had a streak of losing trades. It could just be that invariably there are things going on outside of kind of your awareness, which we'll come on to in a moment, and it might just be an outlier, which is one of those reasons why we talked about right at the start, ensuring that you never trade without a stop loss, you never risk more than a small portion of your account, so that you're able to go and run and work through these particular elements. Fred says that is hedging the trading helping until the market turns again? Yes and no, I would suggest, Fred. In terms of managing drawdowns, it can do. Okay, it can do, Fred. All right, but that would be as part of your overall trading method. So you might actually have, especially, I don't know, let's say you're an options trader, right? Maybe you might have using particular, let's say, options to hedge some of your positions, just in order to basically have your, let's say, your overall exposure to markets. But equally, sometimes it might not be, because sometimes there might be other stuff that is going on that really hedging doesn't even help with, which we're gonna touch on in a moment. But that's a good question, Fred. But it is about understanding, how have things changed? How have things changed? All right. And so, one of the solutions you can be aware of is be clear on trading the right method for your trading environment. Although those two should marry up. You should be very clear about marrying. Know your numbers, right? Make sure that you do your back testing, whether it be manually sitting there going through charts like I've done many times, or whether you use fantastic testing tools to be able to sort of program and back test your particular method. Wherever possible, know your numbers, ladies and gentlemen. It will help you, all right? It will help you enormously. Then we're looking at, money, all right, managing money. First question you've got to ask yourself is, are you managing risk properly? All right? Are you truly managing risk? We've said here that, you should never be trading without stop loss, never risking more than a small portion of your account. If you're doing those things, well, then invariably your drawdowns will be, less painful. It would be the likelihood, as you said, your first loss is always your smallest. But very often people struggle to manage risk. Okay, for me, it's always been one of the simplest things, and I've always recognized its ultimate importance, and that probably helped me to have a long and successful trading career, because I've always put managing risk first and foremost. But I appreciate other people struggle with it, and if that's the case, well, then you need to know, what, if any, cutoff levels do you have? Do you have cutoff levels in terms of how many losing trades you might take in a day? How many percentage are you allowed to lose in a day? What is your overall, value at risk, okay, of your trading account? Do you have a level in mind where basically, you just stop trading anyway? Maybe it's 6%, maybe it's 10%, maybe it's 20, maybe it's 30. Only you will know those, but it's important that you have them. So, traders at institutions, they will have them pushed upon them, okay, by their risk management department. They will not be up for negotiation. They are very, very, there's a hard line. There's no kind of soft line to it. That's effectively, you will have a number beyond which, if you trade through that, you will lose your trading privileges, right? And it's very, very, it's very clear, and there's no sort of, as I say, no real negotiation for that. But, private traders need to have that as well. They need to have particular cutoff levels at which they sort of stop trading. Do you have them? Do you have them for yourself? Lots of traders I know don't, okay? They might say they do, but they actually don't. You also have to recognize, have you been over trading? And it happens more often than you think, certainly for private retail traders. Because, what's happened is you're exciting, you're enjoying trading, right? You just want to basically be fully engaged. Maybe, you're hoping that trading will take you away from something else. Maybe, maybe you're in a job you don't particularly like, or maybe a relationship, or maybe a location, and you're hoping that trading will be the sort of, let's say, the springboard out and away from that, which we're going to come on to in a moment. And so it leads to people over trading. It also leads to people over trading because they think to themselves, I'm not a trader unless I am mashing the keys and putting the trades on. And that's what we need to be. That's what you need to be aware of. It's very easy to be over trading. So you just need to, keep your records and recognize that. You also have to recognize, have you been sloppy in your money management? All right. Have you been getting sloppy? Have you been basically, as it says, have you been keeping good records on your trades? Have you really been adhering to your position sizing on every trade? Have you been sticking to your loss limits, as we just talked a little bit earlier before? Do you have those in place, and do you basically stick to them? But if you're struggling, all right, and if you're recognizing that this is an area where, maybe this is, contributing towards your drawdown, well, then it's time for you to look at scaling down your position size until you either identify the true cause or the drawdown reverses, if it is just a temporary one. But, I can assure you, so if you're doing the money element right, okay, if you're doing that, will help you enormously in starting to turn the corner in terms of coming back from a drawdown. And the final one of those 4 M's of trading is myself. And, here you go. Have you been reviewing your records? All right. This is an area that will start to sort the men for the boys. All right. Men from the boys, just for the sake of that, the wheat from the chaff, so to speak. It's not always, well, it is great to be keeping your records, but you have to review your records as well. And lots of people don't. I know lots of traders don't, or they take a cursory glance at them. They're not really, just because they just want to focus on trading more and more. But that doesn't actually help. You need to review your records. What you will find is that your records of your trading is it's like a gold mine. It is a gold mine of data about you and your trading behaviors. And it's just there waiting for you to sort of tap into it, to unearth, those particular elements of your best, okay, and your worst trading. I've often told the tale of, the first hedge fund I worked for, 50% of my losses came on Fridays, all right? And I was able to understand that from my data. And it was just because I started trading on a Sunday evening, and by Friday lunchtime, I was just tired. I was fatigued. All right. I was just basically having had 5-6 long days of trading. By Friday, my brain was frazzled. And actually, the best thing I could do was just stop trading on Fridays, which is what I did. But I came to that conclusion based upon reviewing my records. Another thing that might be interesting, you may not have thought about is, actually, are you operating on autopilot? Now, what we want is, of course, is for, traders to be following their rules, right? And when they break the rules, that can be, a sign that basically a drawdown is coming, that they're effectively maybe fatigued or burnt out. But interestingly, the other end of the spectrum is also valid. Namely, are you just operating on autopilot? Are you just going through the motions of your process, just going through the motions of your process? Because that in itself can just basically give you an indication that you're fatigued, all right, that you're burnt out, just been going through the motions, all right, that in itself. Start to think about, when was the last time you took a break from trading, right? When was the last time you took a long weekend or a couple of weeks away from trading? People think they can just do it, 12 hours a day, every day, but I can assure you, you can't. Not really, not to perform at the best level you can be. And when I talk about my own clients, about actually having to manage that, how do they manage that? And it is really important. Have a little think about, when was the last time you took a break from trading? Are you actually just going through your process on autopilot? Are you breaking your rules? Are you stopping, keeping the records? All of these things are the little elements that they're giving you early warning signs that you're fatigued, you're burnt out, and that if you're not already in a drawdown is probably coming, and you want to be aware of that. Another big element, and this is something I have to say about a lot to do with a lot of male traders, is that do you have events outside of trading that is influencing your decision making? Men like to think that they can operate in a silo, right? They can operate in a silo and that nothing that's going on in the rest of their lives has any impact whatsoever on their trading decisions. I'm here to sort of break that to you, ladies and gentlemen, that is not the case, right? And that invariably everything that goes on in the rest of your life can have a huge impact upon your trading decisions. So, if you're having financial difficulties elsewhere, that will come into your trading decisions. If you're having difficulties with, with your partner, with your relationships, I assure you that will basically find its way into your trading. Maybe, you're struggling to sleep at night, you're not rested, okay, you're anxious, that will come in to your trading decisions, all right? Maybe like Vasily, you're not getting enough deep tissue massages on a weekly basis. That in itself will have an impact, okay, on your trading decisions. So just be very clear and be very aware that, what goes on in the rest of your life will have, a huge impact, all right, on your trading decisions. And so, it's a part of it is about raising your awareness about what else is going on in your life and how that is influencing your choices and your trading decisions. Because I assure you that we will. All right, you're not in a silo on its own trading. I can assure you of that. But what I can suggest in terms of solutions is take total ownership of your performance. Take 100% total ownership of your performance, the good, the bad, and the ugly. Ensure you're being honest with yourself, all right? Don't be hiding away from your records. Don't be avoiding it. Embrace it and take 100% total ownership. Because actually, in that kind of, let's say in the pain and the uncomfortableness, all right, taking that is also probably your solution that is going to help you evolve to your next level as a trader. And also make sure, take breaks and holidays. Spend time with your families, your friends, your partners, okay? Take time away from trading, okay? Remember, you are trading to live, not living to trade. And when you find yourself being honest about how you are living to trade, well, then maybe that's something you need to sort of address and have a little conversation about. So in conclusion, ladies and gentlemen, drawdowns are inevitable. They will happen to everybody. If anybody tells you they've never had one, they're talking rubbish. But it is all about how you manage it. Don't turn away from it. Don't avoid it. Don't ignore it. Embrace it. Take total ownership of it. It's just a simple fact of trading life that it will happen. Take a bit of time to determine, which of those 4 M's are you maybe struggling with. Has the markets you've been trading, have they changed? Has the method, okay, you've been using, has it degraded? And if so, why? Have you been managing money? Have you really been managing risk properly? And have you been self-leading yourself? Okay, have you been basically sort of just keeping yourself in a good place to be able to trade? And to think that if you are going to, do you continue to trade through a drawdown? If you do, then make sure you reduce size. If you don't, then be prepared to do the work to understand why that drawdown has occurred, all right, so that you're able to put the necessary solutions in place to help you come back from a drawdown. So I hope you found that useful and giving you a little bit of insight. If you've got particular more questions about it or you want to learn more about it, you can get in touch there. As you can see, you know, the Admiral Markets website, and you can global@admiralmarkets.com, email them there for if you've got any particular questions or thoughts. So I hope you found that useful, ladies and gentlemen. As I said, we're constrained by time. All right, we could talk about these all week, absolutely all week, quite easily. Okay, there's so many elements that contribute to it, and we can talk about it. But what I'm hoping is that has just given you a little bit of insight into why drawdowns happen, and what it is, you know, you need to basically be aware of, what you need to look at, and what are the sort of things you can just start to do to help turn the super tank, okay, to make just a little bit of a change to basically stop that drawdown occurring, start to turn the trajectory, and put the necessary elements in place so that you're in a position to basically come back from your drawdown. So, as always, I hope you found that useful. I, as always, wish you every success with your own trading endeavors, ladies and gentlemen. Have a great trading week, and I look forward to speaking to you soon. Trade well, everybody. Cheers.